G'day guys, welcome back to Pete's Investing. It's March the 14th, 2024. This is the natural gas price update. Now we've actually broken out into a outright bearish trend on all time frames, but there is a slight divergence to look out for. Also, I'm also using the indicator which I've developed recently, which helps identify tops and bottoms. Plus at the end of the video, I'll go through a trading idea and how to actually take advantage of the underwriting trend. So I'll go through the various instruments, but I'll start off with the natural gas commodity price. So again, for those new to the channel, I've got the weekly, daily and hourly. And on the weekly, you've got here the ADX25 is still bearish. The daily is also bearish and the hourly is bearish. Our secondary indicator we use here is a trend indicator, but also as a divergence indicator. You can see here when it's below the moving average band, it's still bearish. It's actually just broken through to the downside of that band as well here, and that's a bearish move. Now on the hourly, we do have a bullish divergence, so I'll talk more about that in a second. But again, this indicator we use primarily as a divergence indicator as well as a trend indicator. You can see back here we had a couple of bearish divergence, lower highs on the CCI versus higher highs on the price. It fell off once, and that little range there was a bearish divergence as well, higher highs on the price, and it fell off more significantly. Now let me just expand this this weekly chart to demonstrate a Fibonacci expansion. So what I've done here is I've put a Fibonacci expansion from that high, that range. You can see there it's falling through and just short of the 38% expansion level. So we may see it come down to that level there. And then what I've done as well, if I put in a Fibonacci expansion in this little range here. First of all, let me just do one on this range. You can see there, in terms of expansions, just to that high there, you can see there it's actually broken through the 100% level. So that's rested around there. It's currently resting there. But if I move this, let me just redraw that to the next level down here. So between that high, that low, and that recent high, you can see there we're expecting it to come down to at least one of these Fibonacci levels. I can't see exactly where. I haven't got a crystal ball. And for those Elliott wavers and those Fibonacci experts, they might have a better idea, but it's all guesswork, it's all probability. So let's say we're going down to at least the 61% level. That's always a key area, but that one was previously 100%. So basically, you can see there it might even go down, this bigger range might go down to the 38% and then possibly bouncing, or even the 50%. And that 50% coincides closely with the 100% level there as well. So that's a possibility. Of course, it could go a lot lower. Anyway, there's a lot of speculation there. I'm not going to start to indicate where it might stop. All I do is I look at the current trend on the CCI that I use here. And that's currently telling me that we're in a bearish mode. It's below this band. So predominantly bearish trades should be taken, no long trades. On the daily as well, there was a period here on the daily which was going long. If you were trading the lower time frames, you could have gone long during that period. And again, just stay to the end of the video. I'll demonstrate how to how you could have taken advantage of that little bullish trade. And then on the hourly, similarly, let me just blow that one up. On the hourly, we've got if I zoom out, between that low and that high, you can see there on a previous video, it rested around the 50%. And then since our last video, it's actually broken down below the 61%, and that's always key. When it does that, that's a pretty bearish move. Now, having said that, if I restore that again, as I said, we've got a bullish divergence here on the CCI 150 versus lower lows on the price, and that's a bullish divergence. So potentially, if it bounces up from there, let me just draw a trend line. You can trade these, and I like to use it as a potential reversal. So if you're going short in this case, you probably want to take profits. You can trade them though. So in this case, if you just draw a trend line, if it breaks above that trend line, then I like to take small little gains. And in this case, it'll be a target range between the 23, somewhere in that range there, between the 23 and the 38%. Very small gain, so it's probably not worth the trade in case it falls off again. But that's a minimum retrace. We expect it to break into that area. 90+% of the time, these little retraces work. It could hit that area and then fall back down to the downside, like we said on the monthly. We might see further lows. So again, just be careful about going long. I wouldn't be going long at all, even though that's showing a bullish divergence there. And I've identified, again, if I just zoom out a bit, yeah, I've identified a few little rectangles along the line, along the trades there, where you could have actually taken advantage of those retraces. Now, next on the list of natural gas instruments, we'll look at BOIL. I know a few of you trade BOIL. So again, looking at our CCI 150 and our ADX as a trend indicator. This one's currently on the weekly for BOIL. It's bullish on the weekly, although the price is still making further lows. The reason for that is you can see there very clearly it's a bullish divergence and has been doing that for many months now, versus the ADX showing bearish movement. So just be careful about going long. We want to wait and see until we get a more clear view on the natural gas commodity price, where that goes. But that's making new lows on the daily, bearish on the ADX, but again a bullish divergence on the CCI 150. But notice also the CCI 150 is breaking below the moving average band, so not to be taken, no long trades to be taken. And on the hourly, likewise, predominantly short trades. But similarly, you can see here, if I zoom out, between that Fibonacci range, it broke down through that trend line and it fell down, and that was due to a bearish divergence because we had a higher highs on the price and we had a pretty much a double top on the CCI 150 to that same level. So that was a bearish divergence. It fell off and it hit our target. That actually went beyond the 61%, and like I said, whenever it breaks below that more significantly, like it did there, in this case it's actually giving us a double bottom along this support at 1347. Next we look at KOLD. And KOLD is showing on the weekly bullish movement, CCI 150 likewise, on the daily bullish, and also on the CCI 150 it's broken up through the moving average band, and on the hourly likewise bullish. Now notice, I'll just blow up the hourly chart as a reference. Notice how it's retraced off that bullish divergence, and plus we use these arrows as indicators. Where we see a cluster of arrows, that indicates a potential reversal. Now it did give us a couple of arrows back here, and that were pretty much false breaks. I like to use these cluster of arrows in alignment with the divergence. So you can see there we had a bearish divergence, cluster of arrows, and it broke to the downside pretty strongly. Here we've got a bullish divergence, cluster of arrows, and it's actually broken up again pretty severe, pretty strong as well. In this case, it's actually resting around a 61%. So again, that's a key area. It's deciding on where to go. It could bounce back down, or it could actually break higher. And if it goes much higher than that, we're going to see it threaten this resistance up there at 176.60. Next, we've got UNG. And UNG, let me just minimize that. UNG, we've got a bearish movement on the weekly, bearish movement on the CCI 150 on the weekly as well, but notice we've got a bullish divergence versus lower lows on the price. So that's a possibility of a bounce from there. On the daily, bearish on the ADX, but bullish divergence on the CCI 150 versus the price. Again, we've got those cluster of arrows which help us. And we did have a cluster back there which showed a bounce as well. And on the hourly, we did, similar to the commodity price, we did draw this trend line. There wasn't a divergence on this one, but it did break down similar to the commodity price, and it broke down and it's coming close to this support at 1457. So now I'll jump to the trading idea and how to trade using the natural gas commodity price. So this is one trading idea, and stay to the end of the video to get the rules for this trade type and strategy. But basically the one rule is we only take long positions when the Heikin Ashi, and I've got a Heikin Ashi on the price chart here. We only take long trades when the Heikin Ashi is green, and short trades when the Heikin Ashi is red. That's one rule. But the main rule is we trade, and this is the 1 hour time frame on the green and the pink charts. This is the average down approach. This is the stop loss approach. So we only take those trades when the daily and the weekly ideally are in alignment. So for example, back here, the weekly would have been still in a downtrend, but the daily was in an uptrend, and you could have traded that on the daily alone, but I prefer when the weekly and the daily are aligned. So here, for example, let me go back to the short positioning. You would have taken the short positions back there, and what I've done here, I put in a back test. So this is the average down approach, and this is a stop loss approach. And again, I've got the rules at the end of the video, so stay tuned. So back there, you see that's where I put the back test beginning from that point on the daily. You would have taken those short trades, and you would have stopped taking short trades when it entered the moving average band. You can see there. So that on the short, on the average down approach, on the green chart, it generated 1,995 going short, and you would have stopped taking those short trades. You would not have started the long trades yet, and I'll explain that in a second. So on the average down, it generated 1,995, and on the stop loss approach, it generated $755. So now you don't take any trades when the CCI is within this moving average band. So you only take it when it breaks to the upside. Now I prefer to take it when the weekly and the daily are aligned, both in the long or short position. But in this case, I'm demonstrating the daily alone. So if we minimize that, and I'll demonstrate the long position for you. So this is going long. So again, going from that point, you can see there, this is the average down approach. So entering in long positions there, and you would have stopped taking long positions when it entered the moving average band there. So you can see there where the highlight of the two charts on the right going long during that process. You would have taken, you would have generated 6,780 on the average down approach, the green chart, and you would have generated 2,070 on a stop loss approach. Now notice on the average down approach, you would have averaged down 1 to 3 lots of trades. You would have averaged down, all the rest were single trades. The stop loss approach, just obviously entering one trade each time. So stay tuned to the very end of the video. This is the first slide. I've got 2 slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.